Hi, everyone. If you can just bear with us while we just let a few people register and enroll, which they are doing currently, and then we will kick off this new episode of Trade Talks. Okay, hi, everyone. Welcome to a new episode of Trade Talks by Vantage. This is your go-to for the latest expert insights, trading strategies, and market trends. I am Jamie Dutter, global analyst at Vantage, and I'm here with Hebe Chen, who's our amazing analyst based in Australia. It's just after 11 a.m. in UK, in London, and just after 8 p.m. in Australia. So I think we'll get straight into it and dive into the topic for today, which is, of course, Q2 earnings. And Hebe, hopefully Hebe is on the line and can hear me. We can get to hear from Hebe as well. But if I just set the scene for her, it's obviously a super busy week for earnings. We get around a third of the S&P 500 companies reporting this week. We have had around a third of companies. So by the end of this week, we'll have around 65% of S&P 500 companies having reported. Of that third that have reported, around 80% have beaten EPS expectations. That's just above the long-term average. But on the flip side, the average beat of around 6% is below the sort of 10-year average around 7%. So that's just setting the scene. And I'm just waiting then for Hebe, who is going to take us away with her key takeaways of what we've been seeing so far and some of her highlights. So just bear with us, guys. Apologies for this. We're just getting Hebe on the line now. Okay, Hebe.
Hello. Can you hear me, Jimmy?
Hello. All good things come to those who wait.
Awesome. Finally.
Yes, excellent, excellent. I don't know whether you heard my intro or not.
I do. I just
You
tried
did.
to say hello at me several times and finally, hello, Jimmy.
Hello. Excellent, excellent. Good, good.
Beautiful.
I'm not an IT person, so apologies for that, guys. But Hebe is now here, and I've just set you up perfectly, I think, Hebe, for just your key takeaways, really, on what we've been seeing from companies so far that have reported. As I said, around a third of those S&P 500 have reported already, and there's lots of insights from those. So do you want to take that away and give us, some of your insights into some of the companies that have impressed you most, obviously, and then also, your key takeaways.
Sure. Yeah, we already got about 34% of one third of company from SP 500 has reported earnings. I think the bigger picture there is that overall they're actually much better than expected. The overall SP 500 earnings has improved about 6.4%. Previously anticipated roughly about 5%. And in terms of sector-wise, we do seeing that communication services like in technology continue to lead the improvement in terms of the earnings, which is pretty similar for like what we have experienced in the past 2 years. And then in terms of the other side of the chart, we see the energy and the consumer sector continue to be lagging behind. So that's the pretty much big picture here. Of course, we do have more earnings coming through that we will talk about a bit more later is the big tech company that will potentially reshape these pictures here. So we are definitely have a very exciting week to unfold.
That's perfect, Hebe. Thank you for the intro there. And I guess from my point of view, we all focus on big tech, I guess. And it's interesting, I would say sort of annual earnings growth results have been flat to sort of declining for the past few quarters. And I think that's expected sort of into the back end of this year and next year as well. And if you think about it, because markets are relatively expensive or historically expensive, then it's kind of fair to expect, a great deal, right? So I think from my point of view, it's not a great sign that those earnings are flat to potentially declining for some of the big tech names. And for markets, then, they're kind of punishing those results if they're not outstanding. So anything not outstanding, even good, is being punished. And as I say, that's kind of, if you think about it, in an expensive market, that's kind of fair to expect. So yeah, just a sort of takeaway from my point of view on what potentially we're going to see going forward. Do you have, just moving on then from that sort of brief, broad overview, I guess we've got the Mag 7 here and the sort of performance year to date of stocks compared to the broader benchmark S&P 500. Hebe, any thoughts on this?
Yeah, I think you made a good point that given the stock prices are getting into so high, we're do seeing the US stock continue to make all-time high. That of naturally the expectation for them is getting very high. And for Max 7, I think that's particular case because these are the 7 groups of companies that seems to move quite exceptional well in the past 2 years, and that's where the Max 7 name coming from. But I think this year, I think there's a good chart here that's showing this is probably not the case anymore. We see a pretty divided performance. So we do see as 3 companies, Nvidia, Microsoft, and Meta, continue to beat the market's benchmark in a pretty wide range. But on the other side of the chart, we do seeing some company like Apple and Tesla actually falling very, very behind. So I think they're showing a bit of, for me, I think they're potentially showing a bit of the upcoming trend is the whether or not the Max 7 will split it into 2 groups, or should we still keep calling them Max 7? In terms of valuation wise, I think there's also a good comparison here. You can see some of the good companies like Alphabet, even they perform pretty well, but the valuation seems to do not match up with their market share, the market leading positions, which potentially are some of the reason that we can probably look into more deeply. Yes,
Yes,
Jenny, what are your thoughts?
yeah, I mean, great point. I think with the Mag 7 sort of being potentially outdated now, that sort of moniker, if you like, I think that's a great point. And we've got other companies, which are probably valued higher in market cap terms, at least, than say Tesla, for example, just over the trillion mark, I think. But there are other companies, Berkshire Hathaway, I know, and other tech companies, which, are worth more. So is the Mag 7 slightly outdated, but potentially after this week, we should or may just see the sort of Mag 3, and we need to think of an acronym, which will go viral for those Mag 3. Yeah, that's a great point, I think. And for Tesla, I guess, because I know you're going to concentrate on Alphabet and Google and do a quick review of that. But for Tesla, I guess from my point of view, everybody knew, I guess, that the numbers were going to be disappointing, and they were. They missed on both the top and bottom line, so that was kind of expected. It was more really all about what Elon Musk was going to say, and obviously that those sort of few words of rough few quarters, I think he said, Hebe, which really put the sort of slight nail in the coffin on the day on Thursday after the results on Wednesday, of course, last week. And I guess for me, it's the broader picture, right, about Tesla moving from or being in this transition period, really, and a sort of pivotal phase for its evolution, where it's moving from this sort of EV leader, if you like, which it has been, an incredible ride, so to speak, but now being caught by, China competition, other competition, sort of tarnished brand, that type of thing. And now it's in that transition period, moving from an EV leader into a sort of future tech leader, right? So robotics, self-driving cars, AI-powered transportation, energy storage, that is different from what it has been primarily. And it's really how then Elon Musk sort of executes, that transition, that move away, if you like, from that key driver of EV, if you like, to future tech. So fascinating story as always with a company with CEO as Elon Musk. And I think some of the numbers as well, robo-taxi numbers, hitting sort of 50% of the US population by the end of this year. Interesting number, sort of Elon Musk type number, I guess. And even the Optimus, the robot, Tesla producing 100,000 a month, I think, by late next year. Again, a big sort of a grand forecast, I guess. But those are the sort of key takeaways from Tesla for me. If we move away then from them to Alphabet, as I said, and Google. Alphabet is obviously Google's parent. Hebe, do you want just to let us know your thoughts on what you made of their numbers?
Sure. Yeah, I think Alphabet, like in my personal point of view, I think they do have a pretty good result. I think if you back into the academic level, I'd say it's the A plus result. We're seeing the revenue up about 14%, the earning per shares improved. In terms of the sector-wise, obviously we most focus on is the Google's cloud revenue has improved about 32%. It's quite remarkable. And then given this early in the previous 2 quarters, that has shown a bit of a sign of weakness, but now they're coming back. I think that's what the good stories the market loves. As I mentioned earlier, I think Alphabet, in terms of its fundamental as well as the share price performance, I do personally feel a bit of the disconnection there. They have a strong fundamental here, but the share price seems not 100% reflecting that. I think I understand from the perspective, because now market do have a debate about whether or not the prevailing of the AI will sort of making a bit of an impact to get more customer from the Google search, because now we seems to finding the result, finding the answers from the AI rather than the Google that we used to have our websites on. So I think that's a concern, that's a discussion that will continue to weigh on the momentum for the Alphabet. And I think that's also the point that the company have to prove to its investors how they could balance its AI strategy with its current product setting. And that will be the next, I think, the outlook and also the major concern for the Alphabet to keep pushing up its prices. In terms of the technical wise, I do have putting up a price chart here.
Oh, there we are.
Yeah, so as I in the middle of this, I'm putting up a red bit of a bold line here. That's the prices that the Google starting at the beginning of this year. So you can see that they actually barely only improve a little bit from the beginning of this year. But the last week's earnings do help the prices to trying to breaking out above this upper ceilings that prices move up since the April low about 36%. The tunnel, the upselling of the tunnel here, but that has pulled back a little bit this week. So I think I do seeing a quite strong resistance in terms of 192 to 203. Also, of course, the 200 psychological level that will continue to be a major resistance for the price. In terms of the supporting level, I'll see that the 190, 192 will be a near-term support, but given that the KDJ level showing the price is getting into a bit of an overbought setup, so that potentially I think a bit pullback in the near term is quite likely, but overall in the midterm wise, I think this ascending channel will continue to supporting the buyer and the interest for the Google.
Yeah, that's fascinating. I think I've got a chart actually with the 200-day and the 50-day moving average on. And it's interesting that the 50 days is crossing above the 200-day, which is, I know, a golden cross in many people's eyes. But I wonder whether we've seen that move already, and that's slightly lagging that indicator, which it can be, historically. I think the all-time high, Hebe, is it 208, around that level?
Yes, I think that's likely, but before that happened, I think that price gap there is a quite major hurdle for the Google to overcome, and that definitely will back into fundamental where they have a good story to keep the interest, keep this momentum live.
Yes, no, absolutely. And I think, you made some fantastic points about the cloud division, and question marks around that. And then obviously the search business, which is the one that, people are questioning probably even more just because of the threats that we know exist. I just had a couple of stats, which were for me, pretty obvious, but, when you see them in black and white, really does accentuate Google's position. I think 90%. It enjoys 90% of global share of search. That's excluding China, and that's 5 billion users per month. So, such a massive head start really in this sort of search business. And yeah, again, will be interesting to see how it deals with those threats from users like ChatGPT and all the rest of the LLM. So yeah, great. Okay, that's sort of what we've seen already then, Hebe. If we move on then to this week's main events, four of the Mag 7 reporting. We have Microsoft, as you put here, and Meta reporting after the US close on Wednesday. And then we have Amazon and Apple after the US close on Thursday. So first up, Microsoft. Hebe, if you would give us your thoughts on Microsoft.
Yeah, so Microsoft, as if you remember with previously comparison of price, Microsoft is actually one of the best performer of the Max 7, just below the Nvidia, and that actually do have a good strong reason to support that, because when everyone talking about the AI story, especially for the tech, Microsoft seems to be the one that has ride on the AI wave most successfully, because they're behind the ChatGPT that now everyone knows and uses. And apart from that, they do have a very strong services which is coming from this cloud services, intelligent cloud. And in this one, you can see that they continue to demonstrate pretty strong growth. The past quarter, they keep improving about 21%. And in terms of forecast, I also put a bit of a number here that the anticipation is that earning per share will keep improve 15%. Year over year, the total revenue is also implying a nearly double-digit 7 to 9% year-over-year growth. For a company at this size, I think that is showing a pretty strong fundamental for the Microsoft's business. Apart from that, I think that margin-wise is also something that I think caught my eyes, as that if you remember early this year, that we're talking about whether or not the AI investment for quite a lot of US company, whether they actually match up with the return here. And if I think the company can keep their margin at a very healthy level, they're also showing they do have a very good control, a balance in between the investment as well as the return from the AI strategy. Talking about the prices, let's maybe moving on to the technical chart here. So it's a bit busy chart here. I'm putting a couple of a vertical line just show our audience how the prices often respond to its earnings. And as you can tell from here, that for the past 6 quarters, Microsoft continued to beat the expectation, but the share price is not often moving up. And then for 5 quarters out of 6, we see the prices actually pull back a little bit after the earnings, which probably can reasoning to, because I think you mentioned earlier that expectation is very, very high. The bar is very high. And the investor do need a pretty strong, exceptional story to help them to keep supporting. But you can see that even after a short pullback after the earnings, the prices often will move up, recover again, and keep climbing. As you can see from today, that is now sitting at its all-time high. This ascending channel is pretty solid, supporting the prices in the past 3 months, up about 28%. Now we're seeing the prices is trying to testing the 515 level. I think that will be the key resistance, of course, the watching point, whether the earnings could help the price to conquer that. But below that, if in the case of near-term pullback, I think the prices potentially will stay above 500, the psychological level. Of course, there's a couple of these SMA and EMA to support that. In terms of the near-term or mid-term outlook, I think this ascending tunnel will continue to valid if there's no too much surprises coming from this earnings, but which probably not the case if we taking the historical performance as a guide.
Yeah, no, that's excellent analysis, Hebe. I think that bull channel is quite incredible, isn't it? And sort of many indicators you look at, Bollinger Bands, even Keltner channels, even the daily RSI, all sort of overbought for quite some time. But it just shows you that stock price action can continue going higher even when indicators are saying that it is overbought. And I guess from the fundamental side, just for me, I guess it's just a question for Microsoft is, can it translate sort of its massive AI spend into revenue growth? Like you said, sort of, I think you mentioned that they've spent around, I think this year will be $80 billion. So really now we're expecting some sort of green shoots, aren't we, from this allocation really, or whether they've even allocated too much capital to scaling capacity, I think. So yeah, really interesting story in Microsoft. Just moving on then to Meta. They're also out after the close on Wednesday. That's US close. Thoughts on that, Meta and Mark Zuckerberg, Hebe?
Yeah, so Meta is the also in the top that club with Microsoft that the prices has beat the S&P 500 in a pretty wide range. And looking at this chart, it's the earnings coming from last quarter that probably will provide a bit of the reason, the support for why the prices has been so strong. So two things: the revenue and margin. I also put the highlight the red square here. You can see that the revenue and margin has improved quite significantly. If you're looking back 12 months ago, that is showing a pretty good story about the company's strategy, even despite a lot of the headwinds there. The one major concern, I think, bit of the similar to what you just mentioned about Microsoft, is that whether or not the huge investment. For Meta's case, I think the most concern is the reality labs, and you can see that
Yeah,
this is a sector continue to lose quite big chunk of money, up to
yeah,
4 billion in the previous quarter, and that's showing no signs of the return coming from this big investment. You can see this all negative numbers since the
yeah,
23. So I think that for me is a big concern. If I have to pick up something, but apart from that, I think that Meta has shown a pretty strong coming back story and also a pretty strong momentum in terms of its the product strategy here.
yeah.
In terms of the yep, sorry, Jamie.
Yeah, no, I totally agree with the margins, right? 40+% is pretty strong, right? And while they're burning through what 70 billion on probably AI infrastructure and another 15, 16 billion on reality labs, as you said, it's that reality labs which is the sort of potential kicker, isn't it? With sort of cost control and what they're going to show for it, in their strategy. So yeah, that'd be interesting. I always think as well, WhatsApp, right? The monetization of WhatsApp is sort of not really happening at the moment. 1 to 2 billion with 3 billion users. That's potentially something to talk about going forward. You would think, right? As a possible, area of growth for them.
Yes,
Maybe.
indeed. Yeah, I think that probably not many people remember that Meta actually used to do the VR and the Meta's Wave like in the
Yes.
2 years ago. That's already the story of the history, right?
Yeah. No, exactly. And chart wise, what are you making of this chart? It's
Yeah,
similar.
so
Sorry, yeah, they've done really well, haven't they, with Microsoft, like you said, and like we showed earlier. Microsoft and Meta, easily beating or the only two stocks beating the average Mag 7 performance this year, right? So, yeah, what do you make of the chart?
as you mentioned that they have been up so significantly year to date, and also from the April's low level that also fully recover from that, and now prices is recently just touched its all-time high, and also similarly are putting up a bit of the reference for what the price performance up post the earnings. You can see that the about 50-50 chance in the past 3 quarters, 3 times the price actually move up after the earnings, another 2 times dropping in between the 4% to 10%. The prices also have a very clear ascending channel here, but recently starting from the early July, we've seen the price has pulled back about 8% to 9%. Now is looking for the support from this previous ascending channel here. I think that it's a pretty critical of the pivotal points that potentially if that price keeps rolling below about 700, that will potentially making a reverse, making a U-turn from the past 3 months strong momentum. I think that's the price point that we're awaiting for the earnings to make more a decisive move.
Yeah, no, exactly. That swing low in sort of mid of this month, mid-July swing low, just below 700. I think it's around 691. So that's an interesting area of support, isn't it? Although it looks sort of after again, such a strong bull channel, you kind of think it's quite a nice, healthy pullback before then we go again, possibly, to then the all-time high, which I think is around 747, something like that. I think you've got that, yeah, just 738, and then just before that was 747, the record high. So, yeah, interesting. Wednesday, late Wednesday for some of us, after the close, it was close at 10 p.m., sort of 9:30 p.m. Generally, these results, and then you listen to the call. So it'll be another busy Wednesday for me, at least, and many this side of the world. So just moving on then to the last couple of Mag 7s for this week anyway, on Thursday, as I said, after the US close. So Apple and Amazon. Apple, fascinating stock, obviously struggling performance-wise year to date. What do you think they're going to tell us, Hebe?
Yep, so I think Apple is getting a bit less juicy now. This
Very good,
is
very good.
the only company, but one of the few companies that is expected to post a decline in both revenue and earnings per share for the upcoming quarter. This company, compared to the other Mag 7, they face probably the most complicated headwinds, quite largely coming from the tariffs. This is a company that potentially be hit but most by the tariff because their supply chain. We know that quite a big percentage of supply chain of Apple is coming from China and India, and that is something that they potentially will be getting quite significantly impacted by the new trading dynamic here. Looking at the past quarter's earnings, probably will give you a bit of a reference into the outlook here. Let the major bright spots continue to be the services, which I also highlight here. The service sector now has contributed roughly about 1/4 of the total sales and then continue to improve quite in a much faster pace compared to the other product category. The major concern, which is coming from last quarter as well, the upcoming quarter, is the sales in China. As you can see from the number here, China, the Greater China is the only region in the previous quarter showing a back foot today. Sales and revenue actually declined in the previous quarter, even that the iPhone sales has improved by 8%. But that because what we know about the Chinese economy is getting slowing down, the domestic consumer market is getting a bit of impacted, whether or not the Apple could putting their sales in that region, in the regions at this steady pace. I think that's a big challenge for Apple, and plus we do have the supply chain issue here. So overly, the market is expecting a bit decline of revenue and earnings per share, as well as the margin potentially will get impacted. In terms of the prices wise here,
Yeah, let me just bear with me
sorry,
one sec,
Jamie.
Hebe, sorry.
No problem. Go ahead.
Yeah, chart wise.
Yep. So the chart wise, the Apple prices, as we mentioned earlier, is probably the one of the worst performer out of Mag 7, down roughly. Up in the middle red line here is the starting point, and so you can see that the prices barely changed from the beginning. I'm sorry, they're actually down about 18% from the early beginning of this year, and it has recovered a bit in the past months, but still we do see the prices now face quite significant resistance. Again, it's a price gap in between the 213 to 221. I think that's major price point that we're seeing that whether or not the earnings could help Apple to conquer that. In the case that we do seeing that the earnings do not meet with expectations, a big pullback will potentially help the prices to finding the support at about 210 to 213 level. I think that, and below that we do see a couple of the EMA and all this colorful line here will potentially help the price at least support it above the 200-day psychological level. On the other hand, in the cases that we're seeing the prices conquer the 221, I think that will be quite a big breakout for the prices. We're potentially seeing the prices pull back into challenge the early January high level.
Yeah, it's quite a nice looking chart actually. I think, Hebe, just because although it's lagging, of course, and it's sort of actually only around the 50% mark, the midpoint of the sell-off, that we saw from those all-time highs in late December down to the April lows, the 50% midpoint mark is around 214. So that's where we are at the moment. But the patterns, the near-term patterns for me are quite bullish. They're just a sort of bullish consolidation, tracking sideways, then we move higher. Since sort of June, July, especially July. And then at the moment, we're again bullish consolidation, potentially before a move higher. That's sort of my eye. I'd look at that chart. But obviously, like you say, there's so many issues around tariffs, around supply chains. I think you mentioned that tariffs issue and sort of the 900 million hit still, whether they confirm that or not. And then any guidance, right? I don't think they issued any guidance last time because of the tariffs and because of China and the situation there and supply chain. So, really interesting if they can give us any guidance. And then I guess, their AI slant is obviously Apple Intelligence, so I guess any timing on that would be, you would think, bullish, I guess, right, Hebe?
Yes, exactly. I think Apple do need a good AI story to tell its investors. Now they, as you mentioned, I think there's a lot of headwinds that's surrounding its product offering, surrounding its supply chain. I think a good story about AI, well, they put it as Apple Intelligent. Of course, the AI intelligence, so that will potentially helping the attention to back into the forward-looking pictures rather than just focus on what the issues. Now, as we know, I think you mentioned a good point, is that it's very, very challenging for Apple at this point of time to get a bit of guidance because they yet to fully get an idea what sort of a tariff could impacting in the companies in terms of supply chain, in terms of sales, in terms of the price and margin. I think there's so many uncertainties for the company at the moment.
Yes, and as you mentioned as well, with those iPhone sales, of course, I think it's still something like 49% of net sales, which, with Chinese competition and other competition, is their key driver. And as you've sort of quite rightly said, they're struggling performance wise year to date, stock performance wise, and then lots of concerns as well. I guess there's so much, in a way, there's a lot more pessimism we can judge with what we're saying, compared to all the other Mag 7 stocks that we're talking about. So possible an upside surprise, because expectations are quite low. We will see, of course. And then moving on to Amazon, again, reporting after the Thursday US closing bell. Hebe, finally, Amazon and Jeff Bezos. What are your thoughts on this mega cap tech titan?
Yeah, I guess that yeah, the founders has to attract a lot of the headlines. Hopefully that the headlines will, focus on the company business fundamentally more, I think, for these earnings. Amazon's the major focus, I think, is that they bit of the associated with the AI strategy because their cloud services, they are to continue to enjoy the market leadership that has been on top of the out of all the cloud service provider like Google, like Microsoft. They continue to be the market leader in its position, but because of that, they're also showing a bit of the slowing down because this marketplace is getting so crowded and very competitive. So, which you can tell from here, they Amazon's cloud services has improved about 17% in the past quarter, which is quite remarkably. But if we remember just previously, we're talking about the Google, they have improved about that 23%, something like that. So that's showing that competition in these areas getting very intense. So they have to do quite a lot to keeping their market leadership. That's one of the key challenge here. On the other hand, and don't forget, this is a online retail space, that the retail business will also getting quite significant impact by the tariffs because of the product, because of the price uncertainty and the margin uncertainty. I think that's another thing that will surrounding this company's business model here. So in terms of expectation, the revenue is anticipated up 9.5% year over year, which is not bad. Earning per shares roughly will be down a little bit from the previous quarter. The AWS growth will continue to be roughly about double digit. The retail margin is something that will probably more focus on. And of course, like Apple, it's probably very challenging and hard for the business to have a big clear outlook about whether or not how much margin will be getting impacted by the tariffs. But if they can give us a more like a clear guideline in terms of what they could offset the impact here, I think the investor would love it.
Yeah, I think that the tariffs, again, interesting. Apple, Amazon, same issues in a way, not affecting, Microsoft and Meta so much, is it? I guess. And, Amazon sourcing so much from China, and then US revenues, I think, are about 60% derived from the US, actually. So, yeah, interesting time for the retail side. And I guess the cloud side, we've seen some AWS redundancies, haven't we? Which was sort of cheered by the market, I think. Can't remember how much. Is it 7% even of the company? Around 15,000 jobs, I think, from memory. So that'd be interesting whether, that sort of record operating margins of sort of, I think they're around 39%, whether they can sustain that will be, critical really with the valuations it has. And then, can it scale AI compute fast enough, with these guys spending so much. I didn't mention actually for Google when we went through it. Actually, they said they were going to spend an extra 10 billion. I think you probably saw that, Hebe, on their
Yeah.
sort of capex spend. And initially, it was interesting. I don't know whether you followed the stock. It's probably too early in the morning for you, but the earnings call after Alphabet's results. People were quite skeptical of that. That increase of 10 billion up to 75, sorry, up to 85 billion for Google, but it's now being seen as a positive. That they're spending even more to get even more, if you like. And I wonder when that sort of might. Sometimes that is a negative. So that'll be interesting for Amazon, for Microsoft. Whether they report their spend is higher than they thought. And that's a good thing or possibly a bad thing. We shall see, right?
Yeah, exactly. I think that for the market, often we're saying that it's forward looking, and they, in at least particularly in this uncertain time, I think that all the companies like this, they do need a good story to tell to sort of the ease a bit of the cautious from the investors, given that we all know that no tech company will be immune from this big economy headwind as well as the trade headwind. And looking into all these companies here, they actually quite big chunk of their revenue and sales are coming from overseas. So Microsoft, like 50% of their sales. Apple also have a big chunk of the revenues coming from out of the US. And we definitely know they were getting impacted because of this new trade dynamic in between the US and the rest of the world.
Yes, no, exactly. And it'd be interesting again, sort of with that Google heads up that we've had with their cloud business, doing so well. That traditionally actually is behind Amazon and Microsoft. So it's pretty big expectations for their cloud businesses, you would say. Technically, then, what do you make of this chart?
Yeah, it has, well, on the positive side, you can see that it has staged a pretty beautiful V-shaped recovery
Yep.
from the low, April low level, and has been up quite significantly, trying to recover all the losses from the February high. And we're seeing that the target layer is the back into 242. I think that will be a near-term target for the price if the earnings could continue to support that. Talking about the post-earnings price performance, as I'm putting up all the vertical line here, actually Amazon's post-earnings has actually mostly positive. We're seeing that for the past 5 quarters, there's 3 quarters showing a positive price actions following the earnings. And in the past quarter is roughly about 13%. So that's helped the companies to help the V-shaped in about 3 months ago. So I think that the major watching point in the upcoming on Thursday is whether or not they can continue to help prices to moving much closer to this previous yearly high level at 242. But on the other hand, we do see the support from the ascending channel at 231, and below that, again, back into the multiple of the moving averages. They're showing that near-term buying momentums that at this stage is actually pretty solid and strong.
Yeah, perfect. Excellent. That's fantastic coverage. Thank you, Hebe. And I guess moving sort of onto the broader picture, what are your thoughts on just US stocks in general moving into the summer, into August, and potentially beyond? And also, I guess, tariff impacts on stocks, on sectors. What are your thoughts around that?
Well, I think that the most at this stage, I think given the tariffs sort of alarm has been largely be taking off, of course, I don't think that it's all ease the tension, because we still have to deal with China, and potentially the tariff will move from the country base to a sector base or industry base. So I think there will be a phase number two. But just at this stage, that I think that will give market a bit of a window to taking a deep breath, taking a bit of a relief rally. I think that's pretty much likely to happen in the near term. But in terms of how I feel from this past and that what the company has reported, I do agree, 100% agree what's the point you make, that the expectation is pretty high. And just taking, for example, the Alphabet, the Tesla, including the Netflix, you see that the market actually do have a very high expectations potentially because the price is getting so high, the valuation is getting very elevated. But that also means that given the S&P 500 is getting into the all-time high, there's more. The market always want more from that. So I think that will potentially putting into a bit of a sector rotation. Some of the stock that has getting into very high level that will potentially get in a bit of the slowing down period, while some of the sectors that yet to fully recover or yet to still have the catalyst in view that will potentially getting more interest in the near term.
Yeah, no, that's very good points. And I think the tariff impact is interesting, isn't it? Because we try to separate AI from every other stock, but I think what we're seeing is those stocks associated with AI doing well, and then especially with tariff impacts, right? The sort of import intensive industries, autos, manufacturing, consumer goods, that type of thing. They've been sort of hit hard, haven't they? I think with profit margins squeezed more, and some of the strategies to offset the impacts sort of coming into play, but still it being a struggle for those companies which are more based on the sort of auto manufacturing consumer goods side, I guess. And what are your thoughts generally, just sort of wider impact, obviously, with the macro environment that we're seeing at the moment, and your thoughts sort of for the next few months?
Well, I think if the discussion or the chaos coming from tariff getting a bit of the low slowing down now, I think the another tensions will jump into the front and center is the monetary policy. I think that we definitely have the FOMC meeting coming up this week will be the key watch. But we at this stage the market is still expecting a September cut, roughly about 50% chance. But after that, whether or not we get another one, that's still that a lot of discussion, a lot of changes, a lot of uncertainties that could potentially occurred. And in addition to that is about the inflation. I think that what market has getting a bit of relief about the tariffs getting into down about 15% is probably less. It's probably not the worst case as what we fear back into the Liberation Day, but 15% still 15%. It still will potentially push up the inflation, making the Fed much harder to ease its monetary policy. I think that is a consequence that market seems to trying to overlook at this stage. And that would potentially will coming back, especially when the market is so exciting about probably 2 cuts by the end of this year and potentially would reduce to 1 or even, I think that 1's still quite likely on the table, but I think there's a lot of room to move, to discuss, to feel exciting, but on the other hand, disappointed. I think that's probably the main theme that will occur in the upcoming 2 months.
Yeah, no, it's really interesting with the interest rate cuts, isn't it? And the wider environment. CPI hasn't been affected that much. I know we get core PCE on Thursday, so that's the Fed's favored inflation gauge, and that's expected to stay sticky, really. And if we do get the impacts from tariffs, right, in probably July, August, September data, that's ahead of the Fed's September meeting. So potentially, and obviously then we get revised dot plots and summary of economic projections at that meeting every quarter, of course. So June we have them, and then we'll have them in the September meeting. So potentially then, they may have to sit on their hands longer, I guess, and like you've hinted, I guess, Hebe, possibly only 1 cut, or I know some people are expecting a sort of 50 basis point cut in December, possibly, as an outlier. So they sit on their hands till then. I can't imagine the pressure that they'll be under from Mr. Trump in the White House that we've seen already, Hebe. That's an interesting play as well for markets, isn't it? The pressure on the Feds and the Fed independence.
Yes. Well, I do like based on last week's headline, he seems to taking the pressure a little bit off. But in my point of view, I think there's still a card that he would likely play. It's just probably not the time yet. But I think you mentioned about that market sometimes even some of them even expecting a 50% cut by December. It's not unlikely, but I think that will only come in the case of a emergency if that the economy has showing pretty a big of the sort of pullback. I think that's also coming from, for example, if we're looking for the job data, like in Australia, we already seen last month a pretty surprise up of the unemployment rate, showing a bit of an impact on the economy's health. I think that's something that potentially will apply, given that there's so many uncertainties. But we're still seeing the U.S. economy seemingly quite strong and resilient. But that's a possibility, I think, that the market cannot rule out at the moment.
Yes, and we get obviously the US monthly employment report, non-farm payrolls on Friday, just for our guide. Although there is then another one, isn't there? I think before that September meeting, and there's also 2 CPI reports before the September meeting. So, yeah, excellent stuff, Hebe. Thank you so much for your fantastic analysis, as always. A really exciting few days coming up for us, I think, with so much going on. Possibly, going into August, it might be quieter, although obviously we do then get summer liquidity, summer volumes in major markets. So that can mean more volatility and more, bigger price action, really. So, yeah, interesting few days and weeks ahead. Thank you so much all for listening to Trade Talks by Vantage. This is the first of hopefully many talks, and we're just kind of hoping you can give us a guide as well on what topics you'd like to see and also what events you'd like us to cover. So please do let us know on those 2 things, topics you'd like to see us talk about, and the major risk events that are coming up that you'd like us to preview. But again, thank you so much, and we will catch up with you hopefully very soon.
Thank you, Jamie.
Thank you, Hebe.